Hello everyone, welcome to this technical analysis webinar here with AvaTrade. Just a quick check on the system before we get going. Type OK in the chat box if you're hearing me clearly and seeing my screen okay. All right, just waiting on some more responses. All right, looks like we're up and running. Let me type a quick message just for those who might not have their audio on by accident. Okay, so as we get going, just keep in mind a couple things with our webinars. First of all, there's always risk when you're investing, no matter what type of investments you're doing. Obviously, there's risk as well with Forex, CFDs, spread betting, options trading. For our full risk disclosure statement, you can find that on avatrade.com. As we go over ideas today and charts, understand that we're coming from the educational perspective. I'm not a licensed financial advisor. Don't take what we cover as financial advice. So look at it from an educational perspective. I've worked with literally thousands of clients as a senior account manager here with AvaTrade, and I've seen a lot of what works in terms of strategy and ideas, and a lot of what has not worked. So my experience can be helpful for you from an educational perspective as we go through. Feel free to ask questions as we go through any of the steps. We're obviously going to use technical analysis today, which, what is technical analysis? Basically, it's looking at the history of the price movements on the candlestick charts. It's the basic idea of technical analysis, and you look for different patterns and trends, and different indicators can be used as well. So we're going to look at some manual methods of looking at the charts with some live market movements today. And by manual methods, we're talking about drawing your own lines, maybe trend lines, support lines, resistance lines, finding channels maybe that you're drawing with parallel lines, that sort of thing. And then we may add an indicator eventually within the segment today. We may look at some different indicators on the chart if we have time or if we think it's appropriate. And anytime as we go through, don't wait. This slide makes it look like it has to be the last step, but please ask questions at any time as we go through. You can type in the chat box anything you wish. There are no dumb questions. And if I'm going too fast with anything as well, just let me know. I have no problem going back and repeating anything that we've covered or using different language if something was a bit technical for you. All right, so as we move forward, let's get to some live movements on the charts. I like a lot of times to use tradingview.com. It just is a comfortable chart station for me. But obviously you can use your MT4, and for exact entry points in terms of spreads and that sort of thing, you need to be in your MT4 here with AvaTrade to see the exact prices that are being offered for buy and sell. But in a general sense, we can use any chart station to look at movements and trends that are occurring with our technical analysis. Now, as we get into looking at the technical analysis of some assets and looking for entry points, let me ask, what other type of analysis should we maybe take into account along with our technical analysis? Anybody out there with some experience probably knows what I'm talking about. Any ideas? What kind of analysis am I talking about beyond the technical analysis that we're planning to look at here? What other kind of analysis should we be using along with it, maybe to determine the direction that we would prefer to trade? Mike, correct? You're saying fundamental analysis? Yeah. Fundamental analysis. Does anyone know what that is? What does that mean? What sorts of things are we looking at for fundamental analysis? And you may be wondering, well, this is a webinar for technical analysis. Why are we talking about fundamental? It's because the two really do go hand in hand. You can increase your probabilities of success by paying attention to both, even if you're focusing more on one than the other. Okay, some of you are saying economic reports, announcements, big stories in the news, correct, all of those things, okay? That's fundamental analysis, paying attention to the big news stories, the economic numbers that are maybe coming out, that sort of thing. And so there's a reason why I brought up the Australian Canadian to look at. Does anyone see a recent, on this 2-hour candle chart, and let me zoom in just a little bit, do you see a price point at which might have made sense to do a sell based on the technical analysis within the last, let's say, 2 days or 24 hours? And you could type the price point maybe that you see and explain what in the technical analysis maybe would make you want to have gone back in time and sold from that point rather than buying on the Australian Canadian. Okay, yeah, around 94.80. We can see right here, 94.80. Type OK if you see where I'm pointing here. 94.80. All right. I didn't get a lot of responses in the past couple minutes, so I was just making sure everyone was still hearing me. So, okay, I got some okays. What if I'm going to draw a line here for my technical analysis, some manual technical analysis, as the slideshow said. If I'm going to draw a line here, what would we call this spot where the price hit and dropped, and then it hit again, tested it, and dropped again? What is this price level here that we're looking at? What do we call that? Support or resistance? Is that a resistance line that I drew or a support line? Currently. Yeah, resistance. Javier, you've got that. This would be a resistance point. It's a spot in the market with technical analysis where we see the price hit and dropped, hit and dropped. Okay, so since this was such a significant drop the first time it got around this level within the past movements, and it dropped so rapidly afterwards on these 2-hour candles, I mean, within 6 hours, the last time it hit around 94.80 or so, it dropped from 94.77 all the way down to within 6 hours 94.30. So 47 pips or more in 6 hours straight down. Okay, so and even further, if you go across the whole next full day, it dropped to 94.15 from all the way up around 94.75, 77. So 60 points of drop, 60 pips. That would be quite a profit. Okay, so if we're seeing that in the history and we see this approaching that area again, what kind of pending order? Let's say it was still climbing. You looked at it here and like, let's assume like most of us, you don't have all day to sit in front of the charts and wait for perfect entry points. You could have used a pending order that if it got near this high point again, that you would sell. Okay, what kind of pending order is that? Is that a limit order or is that a stop order? And by the way, there are 4 kinds of pending orders. If you're not familiar with it, let's bring it up. I'll bring up the Australian USD. Okay, well, first let's bring the chart in the MT4. There's the Australian USD, same chart. We could look at 4-hour candles. We could look at 1-hour candles. Either one is fine. And if we're looking, and I'm sorry, we had not Australian USD. Let me look. We had Australian Canadian. So let's do that. Australian Canadian. Let me find it. And there's a reason why I'm choosing the Canadian, by the way. I'll talk about that in a moment. So here's that resistance line we drew. Okay. If I was wanting a pending order as this was climbing to be around this point, and when the price got near this resistance point, I wanted to sell. Any takers, who can tell me what kind of pending order is that? And to do pending orders, you switch from type, change the type from market execution to pending order. And there are 4 types of pending orders. Which one am I talking about? Buy limit, sell limit, buy stop, or sell stop. If the price I think is going to climb, and when it gets up to a certain price, I want to sell, like in this example that we're talking about. Ronald, yes, it's a sell limit. Paul, you're on it as well. It's a sell limit. Limit orders are reversal moves. So, and the stop orders are the opposite. They're continuation. So with the stop orders, you're buying from a higher price or selling from a lower price. With the limit orders, it's the opposite. You're selling from a higher price with the sell limit. Okay. So if I wanted to program back in time when we were back here, as this was climbing towards that resistance, if I wanted to program as it got near this resistance line to sell, I certainly could have done that, and I could be way, way, way in the money here. Obviously, I would want my stop loss far enough away that this little false signal breaking through the resistance, if you had your stop loss too close, you missed out, you hit your stop loss, then it dropped. Okay, and that comes with experience, making your strike zone a bit wider, meaning having your stop loss far enough away that you avoid these false signals, these little spikes, so that you're still with it when the movement occurs. Or you could back it up with a hedge instead of a stop loss, and never risk closing your initial move on, in this case, a sell limit. Okay, we could talk a bit about hedging if we have time. For now, we could talk stop loss. If your stop loss was up here, you're still in it, and here you are way in the money. Okay, so that's the sell limit that we could have prepared. Now, does anyone have any idea why I would choose to look at the technical analysis to go against the Australian and with the Canadian? Why might that have been a good idea this past week? What with the fundamental news would make it so this technical analysis move, this reversal sell limit order, why does it make even more sense that if the Australian dollar got high against the Canadian, that you might go with that resistance line, you think it'll hold and that it'll drop back down? Why do I say that the fundamental news would help support that move? What's going on in the world? Any ideas? Let me ask a more pointed question. What does the Canadian economy depend largely on as an export product? It's a 3-letter word. Starts with an O with an I in the middle and an L at the end. Yes, Javier, oil. Okay, what's been happening with oil prices the past, I don't know, month, 3 weeks, even this week? What have oil prices been doing? Going up or down? If we looked at a chart, would we see that oil prices have been rising or dropping the past few weeks? Yeah, Paul, I'm with you. Up. Yeah, oil prices have been going up largely because, as we read what the quote unquote experts are saying about it, OPEC nations and some non-OPEC oil producing nations have all agreed to production cuts, and that was agreed upon at the end of December to do these production cuts through the first 6 months of this year. And so less production of oil, less supply, higher prices. They're trying to drive the prices up artificially, you might say, because of economic global slowdown, supply glut in oil. That's why oil prices had tumbled so much. In reaction to that, cuts in production promised and prices rising. Okay, now if oil prices are going up and Canada benefits from that, right, then the general idea is as oil prices go up, that helps strengthen the Canadian dollar. Okay, so if we pair the Australian against the Canadian, which is bullish now somewhat because of oil going up, then that might make sense if you were planning on going against the Australian anyways, right? If you can catch a high point with the Australian against a strong horse, so to speak, like the Canadian that's being buoyed by rising oil prices, then that fundamentally might make sense. Type OK if you get that concept of combining that fundamental news with your technical analysis to decide which entry point, which direction you would prefer to have a pending order waiting for. Okay, this sort of thing can improve your win percentage. Okay, maybe you're not looking to catch this support area down here. Okay, it hit here and went up. It hit here and went up. So this support area looks just as nice as this resistance area up here. Why might you not prefer to put a buy limit and buy up off the support? Well, because the Canadian dollar is looking good because of oil, right? And so why would I want to go against the Canadian dollar with the Australian? That might be a way of thinking. I'm not saying you should think that way. I'm saying that's just an example, okay, of preferring one entry point that with just technical analysis looks just as good as the other entry point in the reverse direction, having a reason why you would prefer one over the other. Okay, thereby hopefully increasing the percent chance that you'll be right with that movement. Okay, all right, now I didn't just choose Australian Canadian to look at the technical analysis on just because of oil. There's more. Okay, let's take a look at something else that could help your decision. If we go to something like Forex Factory, okay, type yes if you've used an economic announcement platform like Forex Factory, or investing.com has economic announcements. There are lots of options out there where you can look and see they're scheduled in advance. Regular economic announcements, you can see the exact time of when the numbers will come out. It shows the forecast numbers, it shows the previous numbers, and then when the actual numbers come out, they're color coded red, as in this example here with the Australian announcement this morning, okay, 12:30 at night, really last night, GMT time. So very early this morning, an Australian announcement came out, and this can tell you a lot about what you might expect a movement to do. Okay, so again, we're tying in fundamental news with your technical analysis. Okay, so what level announcement was this? You see there it says high impact expected. That means a high impact on the currency value is expected from that announcement. And if the announcement comes in better than expected, it would have been listed in green there where the actual number is showing at 0.5%. If the actual number is worse than expected, they write it in red. Okay, it's foolproof. So it's written in red here. So the wage price index was worse than expected for Australia, and it's a high level announcement expected to have high impact on the value of the Australian dollar. Okay. If you want to know, well, what the heck is wage price index? Very easy. Click on the details. You can read. It tells you why people care. It's a leading indicator of consumer inflation, on and on. It explains exactly what it is. Okay. Basically, it's, you know, how much are businesses and even the government paying for labor? That's what it is. The increase in wage. All right. So it increased only 0.5%. The expectation was pretty modest to begin with, 0.6%, and it missed that. Okay, so what general effect do you think should have happened then with bad news, worse than expected economically, on a high level announcement for the Australian dollar, starting last night around midnight? What do you think? Did that have bearish pressure on the Australian dollar or bullish? Did it push it down or up? It would make sense, right? That bad news, they're telling you here, high impact, probably would push the value of the Australian dollar down. So now we start saying, wow, if I knew that announcement was coming, I already saw in the chart the Australian dollar, technical analysis wise, was climbing, 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 climbing. And then it already started to reverse by the time midnight hit. Let's look, where is that? Right here. There's the candle, okay? Even if you missed your pending order, let's say you didn't do it. You didn't have time, you didn't see it, but now you look at the chart and let's go back and you said, wow, I knew this announcement was coming, right here, and you happen to be up, let's say, at that time, and you see it's already reversed off of the resistance line, confirming that it didn't break the resistance. And now around midnight, you see more bad news come in for the Australian dollar. You easily could have taken a market sell, and look at the plunge. Look at the plunge over 2, 4, 6, 8, 10 hours. Straight down almost, okay? So in this case, you have a nice resistance line to back you up that you could put your stop loss above so that if it tests it again, you're still in on it. And you already have a confirmed reversal off of it. And then you had bad news come in on the Australian dollar. So this is a great move, technical analysis wise. And you're backed up by fundamental news. More than one thing. Higher oil prices should be strengthening the Canadian. That would pull the Australian dollar down. We've got a resistance line that looks like it's already been confirmed with a reversal off of it. That should help you out with your decision. And then we've got a negative announcement on a high level announcement on the Forex Factory they're showing. You know, what more news do you need to know? What more information do you need to know maybe to make that decision? In this case, maybe you were going to sell. Okay, and obviously in this example, it worked out great. Sometimes, even with all of that information saying, hey, I should sell, sometimes it goes wrong. But it's not about being right every time. It's about being right enough to profit, right? In the end, you need to profit. And that's the objective. Be right enough that you're profiting at the level you'd like to profit. Okay, so any questions? An inverted head and shoulders. Yeah, right here we see that. Here's the head, here's the shoulder. I don't know if I personally would trust that this little support from the other shoulder is going to hold. Likely you might see a bounce back up just because that formation is there. But will it hold? You might put a pending order down below that support. If it breaks, it could continue dropping, right? By the way, if you wanted to do that, if you wanted to put a pending order here and say if it breaks below this other shoulder, I think it'll keep dropping maybe at least to this head, what kind of pending order would sell at a lower price than it is now? What kind of pending order would sell from a lower price than it is now? If you're waiting for confirmation that it's going to break that support rather than bounce up, sell stop. Exactly. Javier, you're on. It's exactly what it is. Remember, the stop orders are continuation movements, meaning if it drops, you think it'll keep dropping. It'll continue in the same direction. Those are the stop orders. So sell stop is you're selling from a lower point because you think at that lower point, it's confirmed that it will continue to drop. That's the idea of the sell stop. So that's an idea where some people say, wow, it dropped so much. Why would I sell now? Well, you look at the technical analysis, and as someone pointed out, we've got an inverted head and shoulders, right? Maybe that's something that's enough for you to say, with all the bad news on the Australian, if it breaks that little support on the other shoulder, then maybe that's enough for you to say, I think it'll keep dropping. Okay, maybe it's not. Maybe you prefer to wait and see if it comes back up again, then you want to sell. That's obviously up to each individual trader, how many check points on your list of what you're looking for before you place a trade that you want. Someone's asking, how many types of news should you know before formulating a trade? So if you're looking at the technical analysis and you like what you see, the question then is, how much fundamental news do you need to find to make your move? And there's no one rule. It could be one thing that you think is big enough, right? What if a story broke right now? You see a big headline on Bloomberg or on Reuters saying Brexit deal imminent. Both sides agree. What if you saw a headline that came out like that? What do you think would happen to the pound with just one news line like that? You probably don't need multiple stories if you have a headline like that comes out. You could see a huge movement with the pound up if people were excited that some kind of good deal maybe was close. So you don't necessarily need multiple fundamental stories to back up your technical analysis, but obviously the more the better, right? The more the better. Okay, so I think we've covered a bit about Australian dollar. And by the way, there's more. What else about the Australian that makes it weak? Look at this website. This is an interesting website that I look at pretty regularly, marketsandmoney.com.au. Just happens to be a site that's Australian based that regularly updates information about the Australian economy. Okay, here you can learn what the major exports are for the Australian economy and understand that iron ore being exported to China is directly related to the value of the AUD. And when China's economy slows down, iron ore exports slow down, and it has a negative effect on the Australian dollar, all of these sorts of things. Okay, fundamental news affecting the movement on the chart. So here we see more negative news for the Australia. I mean, look at these headlines. Business conditions in Australia falling sharply. Next crash imminent? Question mark. Australian property declines. Could see interest rates cut further. Okay. Property prices are falling globally and in Australia, in Sydney and Melbourne specifically. As you read through a lot of the articles on this site about the Australian economy, you start to see, wow, I'd rather find a high point technical analysis wise and sell the Australian rather than banking on the Australian going up, right? Now, that's exactly what this was. High point with the Australian, resistance line, a lot of negative reasons about why the Australian could drop, and look at it drop straight back down. It was quite predictable, okay? Now, that isn't to say that there couldn't be breaking news right now, right? China, US trade negotiations. What do you think would happen to the Australian dollar and its respect of this support line if right now news broke that there was a trade deal between US and China? What do you think would happen with the value of the Australian dollar? Would the Australian strengthen if there's good news for China, or would it weaken? Given the fact that they export a ton of commodities to China. In fact, what we've seen each time positive news leaks out about the negotiations between China and the US, we've seen the Australian strengthen in response. Okay, and as steel prices and iron ore prices go up, we see a strengthening of the Australian dollar as well. Okay, let's do some macroeconomic economic look on the technical analysis here. By macro, I mean, let's look, instead of 2 hours, let's look at 1 week candles. The Australian dollar was dropping tremendously, and maybe 1 day candles will give a better view. The Australian dollar was dropping, and I can draw some lines, maybe going back from this point here. Okay, these are 1 day candles, so this was all year last year. Okay, all year last year we had dropping, and then something happened here. Something happened here. It changed. Why did the Australian dollar start to go up? If you compare when steel prices and iron ore prices started to recover, you'll see this technical analysis shift matched the shift in rising steel and iron ore prices. China had some new rules kick in about environmental rules where they had to use a higher grade of iron ore. So Australia happens to have that higher grade of iron ore. So even with an economic slowdown in China, they started buying a higher percentage of the iron ore that China imports. They started getting even more from Australia. And so that increased demand specifically out of Australia. And so it helped Australia out. It helped their iron ore prices. And we also saw a rise in steel prices. along with it because those are more expensive grades of iron ore, right? And so it caused the prices to go up. That helped the Australian dollar. We see a reversal now again. These are one-day candles. Look at the alleyway. Look how perfect it is, technical analysis-wise. Okay, we call this a channel. The recent drop that we were looking at on the 2-hour candles was here. Was that at the top? Was that at the top of the channel, technical analysis-wise, that I drew, or the bottom? Were you getting in at a high point to go against the Australian if you traded that down on that example we looked at on the 2-hour candles, or a low point? Was at the top, Johan, correct? Was at the top of the one-day candles. What an opportunistic entry point, technical analysis-wise, really. It was at the peak of this channel. Every time it got on the parallel slope, it dropped. Got to the slope, it dropped. And it was right on the slope just recently. Just when we were at this spot I'm pointing at here, here's our resistance line that I drew, this yellow line. When we were looking at the 2-hour candles, it was right here, right at the top of that channel. So technical analysis wise, not only on the micro view, looking at 1-hour candles, 2-hour candles, but on the macro view, looking at 1 day, 1 week candles, it was a nice entry point maybe to sell from, according to technical analysis on the chart. Okay, so then we call this an outside in or an inside out view with your technical analysis. You're looking at the bigger picture. You're stepping away, like stepping away from the mountain and looking at the bigger picture. And then you're also zooming in, like with the binoculars, and you're zooming in and saying, okay, it looks ideal on the 1 day. Let's zoom in. And on the 2-hour, boy, that was ideal here. Here's the slope from the 1-day candle channel. And it was right up near the top. Now, does it make sense why it tested, why it broke this resistance line and tested up to here? Why did it break through that resistance, then drop? It hit the slope. It hit the slope of the 1-day channel. So it was even more predictable that your stop loss maybe needed to be somewhere up beyond this slope to avoid the false signal through this resistance line. So we're taking into account 2 manual methods. A larger channel, in this case on the 1-day candles, backed up by a resistance line on the 2-hour candles, and that playing a role as to where maybe our hedge trade would kick in to cover ourselves if it kept going the wrong way, or where my stop loss maybe would be ideal. Type OK if you get that idea, that concept of taking an outside in look or an inside out look and having more than one layer to your technical analysis. Okay, looks like everyone's with me. All right, so this became even more predictable. This became an even better move in hindsight, looking at this, boy, that would have been a great entry point somewhere around here. Okay, for more than one reason, technical analysis wise, and for more than one reason with fundamental news, fundamentally. All right. All right, so we've spent a little over half our time on one asset, breaking it down technical analysis wise, inside out view, and then combining fundamental news with it. Well, we talked about oil, right? Oil going up, climbing. Why don't we look at oil? And if we do WTI, that's West Texas Intermediate. That's the US crude that's on our platform as well. Wow, look at that. Okay, so these are 2-hour candles. Look at that huge climb. It had a breakthrough, obviously, technical analysis wise. Right here, there was resistance, and it blew through that yesterday. It tested, dropping below, but held and went right back up. And this is interesting. And this is another reason I like to look at more than one chart station. This asset we're looking at here is not on the futures. So when the market closes at the end of the trading day yesterday and then reopened today, you see a gap if the price changed while the markets were closed. Between closing and opening the next day, you see it gapped up. Bullish sentiment, it gapped up. When you're looking at oil here, it's traded on our platform on the futures, so it runs straight through the night. So you're not going to see that gap unless it's from Friday to Monday. Then you can see a gap, okay, with a price change while the market's not moving on our platform through the weekend. But through Monday through Friday, it's moving straight through the day, straight through the night. It's futures. So you can get an idea of sentiment beyond just the movements that you see on the futures by taking a look at what happened from the close of one day to the open of the next on the non-futures form of the asset. And here it gapped up. Now it returned back down almost to where it gapped up from. What do you think might happen when you get a gap up? Positive sentiment, obviously, or else it wouldn't have gapped up. Technical analysis wise, it rises, or it climbs back down to where it gapped up from. That becomes a form of support now. What move might you make if you know there's bullish sentiment, a gap up at market opening? What are you thinking here? What move? The technical analysis showed us a gap up. We don't see that here with the gap, but it obviously exists. Here's crude oil. And actually, we do see the gap. This could be, no, I'm looking back. This was Friday and this is Monday. Okay, this is a different gap. So as we're looking at that, yeah, you would think it would go up. And so, but the same holds true. Same holds true. This was a gap from Friday to Monday. Friday to Monday, it gapped. And like I was saying, even though it's futures, you'll see a gap from the close of one week to the open of the next week. And so you see it gapped up, and look, it's held. It tested it, but held. So had you drawn a line here from where it gapped up from, boom, okay, here was the gap Monday. You could have had a pending order waiting. If it returns back to where it gapped up from, here, what kind of pending order would have made sense here? It returned back to where it gapped up from. That becomes your new support. A buy. Yeah, up, Paul. I'm with you. So that would have been a buy limit, right? Buy limit. When it gapped up, it's up here. You take a shot that you say, okay, if it ever returns to where it gapped up from, I want to buy. So you put a pending order here to buy. It comes down, trips your pending at the spot of where it gapped up from, and look how it rises back up to a nice profit. Okay, that's another, I don't want to call it a trick, but that's another method of technical analysis, looking for gaps, which is an indication of bullishness or bearishness, and then waiting for a return to an ideal entry point before you enter, which is an example right here. Okay, and now you can understand why did it break this support up here and then go right back up, right? It had formed a little bit of a support here. Why did it break this support that was formed and then shoot right back up? Well, this is your answer here. That's where it gapped up from Friday to Monday, and there you go. Okay, and let's go back. I think we might have been seeing the same gap on the other chart. Let's look. Let me make sure. No, this is a different gap. This is the 19th and this is the 20th. So you've got a gap up again, a new gap, not the weekend gap, but a daily gap. You can see it on this chart. So continued bullishness. Very interesting. Okay. All right, so let's go back to the MT4. Any questions on oil in terms of the technical analysis of what we just looked at? Pending orders for making moves based on the technical analysis, or any fundamental questions? You certainly don't have to. Some of you are asking. You certainly don't have to buy on oil just because there's a bullish gap up leading into today, and just because you see a support and this signal showing that it held from this gap from the weekend. If that's enough to convince you fundamentally and technically you should buy, you certainly could, right? But if you wanted to sell, we could talk about an ideal location where you might decide to sell. If it breaks this level, right, where it gapped up from, whatever news made it gap up over the weekend into Monday, if it breaks below that level again, what do you think that confirms? If the price dropped down to this point, somewhere down here, back below the gap up, it's probably a change in sentiment again, right? Something fundamentally changed if now there's bearish sentiment and it gaps back down below this upward gap, then maybe that confirms that you'd want to sell stop prepared. So you don't have to wait for that to happen. You could anticipate that it could happen, right? You could put a pending order, sell stop right down here below this gap location. And with the idea, you're thinking if it drops back below where it gapped up from, then there must have been bad news for oil. And so that might be a smart spot to have a sell stop programmed, because it would confirm that you think something happened that it should continue to drop. Type OK if you get that concept of why you might choose to use a sell stop from a location like that. All right, looks like everyone's okay. Well, I think that's pretty good. We've covered two pretty major assets, oil being one that's had a lot of movement of late. It's doing a lot of things, and really technical analysis wise, oil has been very, very predictable and easy to read, as we can see here with our small example. If we looked at the 1 week candles, the 1 day candles, we would see similar things with breakthroughs at the resistance and big climbs after breakthroughs. Pending buy stops would have made you a lot of money on oil this past month. Okay, and obviously we looked at pretty thoroughly the Australian dollar technical analysis wise, with a lot of fundamental news to back that up. Okay, if there aren't any other questions or comments, I think we'll end things here. We've been going about 45 minutes. Any final thoughts before we cut things off? Okay, great. Well, thank you all for joining. I appreciate it. You're welcome to come back to any of the upcoming webinars. It's typically same days and times. Monday, it's a later time, about 6 p.m. GMT on Mondays and 10:30 a.m. GMT on Wednesdays. And we may be looking at cryptocurrencies next week. So feel free to join. Okay, bye for now.